In this video, I want to show you why just one daily candle can change your life. One daily candle can change your life. Now, I've made some videos about this in time past, like 2 videos about this, but in this video, I want to add more things that will help you to become more successful, that will help this strategy to become more better for you to trade and to increase your win rate. Okay, that is the purpose of this video. Like you can see here in this week, we actually traded this strategy. You can see how we traded a USD card. This is USD card this week. You can see how I shared this setup, and many of you are maybe wondering how I got this setup. Actually, this setup is actually from the daily candle, previous day daily candle close strategy, but there is a little tweak towards this. There's a little adjustment which I have made on it. All right, so which I want to show you. Some of you are asking me in my DM how I actually got a setup that we traded this week, and that is why I'm actually making this video, to show you more secrets towards this daily candle strategy. All right, we did USD card sell, and we also did USD card buy. You can see how this setup played out. So, but after this video, you're going to get more insight into this strategy. The daily candle close strategy is based on taking trades from the intersection of the previous day's daily candle close and the current day's candle wick, okay, or shadow, or just slightly beyond, but not beyond the previous day's high for a bearish scenario, or previous day's low for a bullish scenario. Don't fail to view this video to the end, because I'm going to be showing you three cases that I have not shared with you before. 3 tweaks to this strategy which I applied this week that helped me to get those trades and help us to win those 2 trades I've just showed you that we did this week. If you are not in our free Telegram channel, kindly do so, because in our free Telegram channel you can see where I share these trades. Okay, now let me just do a little bit recap. For a bullish candle, this is a bullish candle. For a bullish candle, you are aware the candle opens right there, okay, and then makes the low of the day, and now trades up, makes a high, and now closes there. Okay, and it follows the principle of the AMD, which is the accumulation, manipulation, and distribution. The market opens with the Asian session, takes trades low in a manipulative move, deceive retail traders who will sell, and now goes in the opposite direction in the London session. Okay, and the intention is to this is called the distributive phase, and then it makes the high of the day, and now later closes right there. Okay, this is the AMD. Okay, for a bullish scenario. For a bearish scenario, the market opens right there. This is the daily candle. This is the D1 candle. You need to be aware of this, because this forms the basis for the strategy. I'm doing a recap for this because of a few are viewing this strategy for the first time. So this is the open for a bearish scenario, and now the market makes the high of the day, and now trades down, makes the low of the day, and now closes right there. Okay, for the bearish AMD, you have the market open right there, trades high, makes the high of the day, in which is the manipulative move, and now distributes down. Okay, before it makes the low of the day before it now closes right there. So this is the accumulation, manipulation, and distribution for the bullish candle and for the bearish candle. Okay, let us see now the bullish scenario of this strategy, the candle close strategy here, as I've depicted. This is the previous day's candle, this is the current day's candle, this is the previous day's candle low, and this is the current day's candle high. Okay, for a bullish scenario. All right, so now the strategy actually says that you mark the close. This is the close of the previous day's candle. This is the daily candle, mind you. This is the daily candle. What happens is that you mark the daily candle close, which is here, previous day's daily candle close, and now this is the current day's wick. So your aim is to take trades from this area. Okay, and sometimes today you might as well get your setup anywhere from here. Okay, this area is where you're looking for your setup. All right, this is where you're looking for your setup. But I said in my previous videos that this is where the most of your setup should come from. Over 80% of your setups should come from here. Okay, but I'm going to be showing you some tweak towards this. So now the aim is for you to have the market to return back to this point, and now you take a buy trade from there. Okay, that is what I've just depicted right there. Okay, you can see the previous day's candle, current day candle, and this is intersection, and this is where we are looking to take trades. The market actually comes right there, and now gives us an entry confirmation and buys. Okay, so that is the strategy. Now for a sell scenario, the market, this is the previous day's candle, this is the current day's candle, previous day's candle high, current day's candle low. Okay, and now this is the previous day's candle close right there. The market opens here, trades high, makes a low, and now closes right there. And this is the current day's wick. So we are looking to take trades around here. Sometimes, as I said, trades can as well happen here, but on no account should you trade when the market, when this previous day's high is broken, because if the previous day's high is broken, the market could retest and buy, continue to buy instead of selling. We said on no account should you to take a buy trade from here if this low is, if the previous day's low is broken, because the market could just retest this and sell. Okay, so I hope that is gotten. So we are looking to take trades from here. The market should return to this intersection of the previous day's candle close and the wick, and now sell. Okay, now this is what I have just depicted right there. Okay, but we look for some form of entry confirmations around here, and I've said you can use your smart money entry confirmation or maybe any other retail reversal pattern before you now sell. Please view my two previous videos I've made on this strategy. That will give you some more foundation about the strategy. The intention of this video is to give you three cases, three tweaks to this strategy, which I applied this week to win those two trades. Okay, I just showed you at the beginning of this video. Three special cases. Number one is that when setup appears at the previous day's week instead of the current day's week. You know, I said that most times we have 80% of our setups from here. Okay, 80% of our setups should appear from the intersection of the current day's week and the previous day's candle close. But there are situations whereby instead of market to give us setup at this point, it might now give us setup here. That is why you need to be very, very observant. Okay, and I'm going to show you how we got a setup from here, from the previous day's candle week instead of the current day's candle week. Okay, so it happens. So I'm going to be showing you that. Also, when the second scenario or the second case is when you have to refine your lower time frame zone. Okay, when you have to refine your lower time frame zone. The third case is when liquidities have to be taken out, when liquidities have to be taken out before your zone. So these are the three cases I want to show you, and these three cases will give you more better insight into the strategy and help you to know the different occurrences so that you would actually trade this strategy more profitably. Okay, I see some of you in the comment section giving me comments about how that you have traded this strategy and it has worked. I said several of you have traded this strategy and it has worked even on gold and different other market instrument. Okay, so thank you so much for your support. If you are yet to subscribe to this YouTube channel, please kindly do so. Do not fail to subscribe. Okay, give this video a thumbs up if you find value from all my videos. Share my videos with your friends, with other traders, and I will help to give you more secret. There are a lot of things I need to release to you. There are a lot of powerful setups I need to release, powerful information that will help you to change your trading career. But the more you support me, the more I will release those information to you. This information, I have got this information for years and for months, but the more you support me, I will release these strategies and this information that will better your trading career. Okay, for me to give you free means that there is more. There is more in my books. Okay, for me to give you this, release these ones, means that I still have more. But if you support me, I will do that. Okay, the first case, let's look at the first case. So when the setup appears at the previous day's week instead of the current day's week. Okay, now in all the previous videos I've told you that the setup can mostly appear at the current day's week, but look at now, this is USD card, that trade we took. So this is the previous day's candle, this is the current day's candle. Okay, now ordinarily we should be this is the candle open. Okay, this should be the candle, candle open. Okay, and now this should be the low of the day. Now the market should make a high of the day and now close around here. Okay, the market should close around here. So our setup should be somewhere around here, intersection of the candle close and the wick. This should be where we should look for a setup. But in this case, the market gave us a setup around here. Okay, which is different from what I've been showing you in my previous video. This is another case. So now the market came back to this zone, all right, the previous day's week, and bought from there. So that is what I want to show you right now. Okay, I want to show you how that happened, and you should be observant. But I've told you that your no account should you on no account should you take a buy if this previous day's low is broken. Okay, this previous day's low should, if it is broken, you should not aim to take a high from here, because what would happen is that the market could retest this and sell. Okay, so you could actually take a buy from here. Okay, you could take a buy. You could take a buy from here, but in this case you can as well take a buy from here, but not after this. Okay, not after this. Okay, that is what I want to show you, right? That's the first case. Okay, that's the first case. So you can see here that I've shaded this point. Okay, I've shaded this point, and now looking that the market should come back to this point so that we can take a buy. Ordinarily it ought to have been here, as I used to say in my previous video, but in this case it's on the previous day's wick that the setup appeared. So you need to have a trained eye, and that trained eye has to come from practice. Okay, you have to show up at the market every day to gain practice, to gain knowledge, practical information about how these markets work or different variations. Now let us see. So I've said that the market should come to this point and reverse in this case. Okay, this is a little quick tweak to what we've been seeing, what I've been showing you. Okay, now let us see. Let us go now to the lower time frame, because this is your daily time frame. Let's go to the lower time frame, which is 15 minutes time frame. Now on the 15 minutes time frame, you can see how this is actually, this is the current day's candle. This is the current day's candle wick, is around this point. The current day's candle wick is around here. But why did I not put my setup around here? I will show you in the second scenario, or in the second case. I will not mention it right now why I did not put myself. But if you have been following me over the months, over the years, you will know the reason why my setup should not be here. Okay, my demand zone should not be here, because this is the wick. This, if you go to a higher time frame, this is the wick of the current day's candle. But instead of going for the wicks, applying to take trade from the wick of the current day's candle, I actually went for the wick of the previous day's candle. Okay, and if you have been following me for years, you will know, but I will still show you in the second or third case why we did not take a trade from here. Okay, so now see the reason. You can see, if you know the reason, you can be seeing the reason from my markings right now. You can see the reasons. Okay, you can be seeing the reasons. I will not still say it until I get to that second case. But if you have been following me, you can see, as I've been marking, what I'm marking right now will show you the reason. Okay, you are seeing the reason. You can see the reason. This dollar sign, you know what this dollar sign means. I hope you know what this dollar sign means. Okay, let us proceed. So this is the previous day's candle wick. Previous day's candle wick. Okay, this line now is the previous day's candle low. Okay, and so we should not take trade if the market breaks this low. I'm not going to take trade from here, because there could be a retest and sell. Okay, so but in this case we are taking trades from the previous day's candle wick. Okay, now let us see. I share this setup now to my group in Telegram. So if you're here to join our free Telegram channel, the link to the free Telegram channel is in the description box of this video. And if you want me to take you by the hand one-on-one, it could require a little bit commitment from your side, but it's an investment that will better your life forever. You'll better your future. So kindly contact me. My contact detail is in our free Telegram channel, and I do one-on-one mentorship that can help you, take you by the hand and correct all your deficiencies and help you to become a better trader, and that you'll be happy all the rest of your life. Okay, now you can see that the market came down. In my VIP channel, I told them that here, let us look at entry confirmation, and we use the SMC entry confirmation strategy. Have a change of character right there. Okay, change of character right there, and now we now have the market returned. The market returned to this order block. Okay, the market returned to the order block, and this is our stop loss here. Stop loss, this is our stop loss distance. Okay, and now we took this trade right from there. Okay, the second setup I showed you at the beginning of this video. Okay, so you can see how it played out. You can see how it played out, and this is the previous day's candle wick. And the reason is because of this. We didn't go because of this dollar sign, which I'm going to be showing you in the next case. You can see how the before and after setup. You can see the before and after. Before and after. You can see the before and after of that. So now let us go to the case 2 and 3. Case 2 and 3 comes together. All right, so the case 2 is when you have to refine your lower time frame zone, and case 3 is when liquidities have to be taken out before your zone. All right, when liquidities have to be taken out before your zone. Now let us see that. I'm going to use one example to explain these two cases, and that was still on USD card, our trade on USD card this same week, but it was a sell trade. You can see when we woke up, we saw this candle, previous day's candle, we saw the current day's candle. Okay, now this, as you are aware, is the open. Okay, for the buy scenario is the open, this is the candle high here, and this is the low, and this is the close. So we mark the close, this just as in previous videos how we got our setup. So we are looking to take trade from here. Okay, we are looking to take trade from here. We want the market to return to this week. Okay, this week, a zone in this week, and now we should trade this setup down. Okay, now you can see here that I've shaded this. Here is where I want to take my trade from the lower time frame. I want the market to return here, and now we take our trade. Now you can now see on a lower time frame. Let's go to lower time frame. This was actually the zone that I marked in a lower time frame. So remember, this is case 2. In case 2, we mark the zone, mark the week, but here this is unrefined. This is unrefined. Unrefined. This is unrefined zone, and this is my refined zone. Refined zone. Now, what gave me this impetus? What gave me this is that you need to, because of something, which is case 3, because of the liquidity, and that is what I was showing you. This is liquidity. Liquidity is the dollar sign, which I mentioned, which I've been telling you about, the dollar sign. Once you see all of this is showing you that this is liquidity. Okay, liquidity. Now see on a clearer place, and that same setup, once I saw this was supposed to be my zone. From here, as I marked initially, was supposed to be my zone. Okay, that was supposed to be my zone, but I did not bother taking trades for it because I know that this liquidity will be taken out. Okay, this is liquidity. This is liquidity, as I was showing you. This is liquidity. You don't take trades from liquidity. Once you see a liquidity on if you want to take a sell, you see a liquidity. Most times, the market makers will take out this liquidity. Liquidity is money. Okay, this is liquidity, and I've made a separate video on liquidities. Okay, there are basically 3 most common types of liquidity. I'll put the link on the description box of this video. You need to know what is called liquidity. Once you are trading this strategy, the difference between you and an SMC trader and any other trader is because you don't just take trades from anywhere. You still apply your knowledge of smart money concepts when you are trading these strategies. Okay, you still apply your knowledge of smart money concepts. Now, because there are liquidities here, I will not aim to take trades from here. This liquidity means stop losses, retail stop losses, and the retail stop losses form a fuel. They form a fuel for the trades of the smart money traders or the market makers. Okay, they will always want to take out your stop losses. So if there is a liquidity pool, in line of your trade or for a sell scenario, the liquidity pool will be taken out before the sell. Okay, all of this will be wiped out. If there's a liquidity pool on the line of your buy trade, smart money trade, the market maker traders want to take it out. Let me show you for a buy scenario. Now, if there's a liquidity pool right there, this liquidity pool will be wiped out before the zone, before the market makers will now buy. So you avoid taking trades from a liquidity pool. All right, because most times it will be taken out before the actual trade. Like here, for the sell scenario, we have something like this. Liquidity pool has to be taken out before the actual sell. The market makers will go for the zone after the liquidity pool for a sell scenario. For a buy scenario, the market makers will go for a zone below the liquidity pool before the buy. Let me say that again. For a sell scenario, the market makers, they will go to the zone above your liquidity pool. Okay, this is this zone above your liquidity pool. Okay, this is your liquidity pool. But for a buy scenario, the market makers will go for a zone below the liquidity pool. Okay, that is for a buy scenario. So let us proceed. Now you can see that now this liquidity pool was taken out. Some retail traders will place their stop loss right there. They will want maybe like take this trade from here, they want to take this trade, not knowing that it was only a trap. The liquidity pool here was wiped out by these candles. Wiped out. Stop losses here were wiped out. So, but we, from our knowledge of the smart money concept, we had to wait. I shared this with my VIP group and I told them that it was time to sell, and this liquidity pool was wiped out, and now you can see this candle. It was a fuel. Look at this one candle, just one candle, one 15 minutes candle, one 15 minutes candle. It was so sweet a setup, so sweet a setup. You can see that we sold this. So sweet a setup that one candle gave us this money, one candle. But this candle, this sweet candle, one candle sell, was this high momentum candle happened because of this liquidity pool. All retail stop losses have been grabbed. All right, all retail stop losses have been grabbed, and it formed an impetus, formed a strong fuel impetus for this strong move right there. So when trading this concept, you need to apply your knowledge of smart money concept. It is very, very important. You are a different trader. You're not just like an ordinary trader out there, retail trader out there. You apply this concept in everything trade you take. All right, you apply it. Okay, so you can see here that I said this market is going to sell, and you can see the before and after of this. Okay, so you can see how the previous day's candle close and the current day's candle strategy have been played out. This a little tweak to it, how I was able to manage it using my knowledge of smart money concepts. Okay, so that is why your knowledge of smart money concepts is very, very important. Even when you are trading any strategy, it will give you an edge over other traders. Okay, so I hope you've learned from this upgraded tweaked video that I've just made. Okay, these are the two trades we took this week. Okay, these are the two trades we took this week, and you can see how that our knowledge of SMC principles have helped us to trade the previous day's candle close strategy more profitably and more successfully. Okay, you want me to take you by the hand, please contact me. You want to join our Telegram channel, the link is in the description box of this video. Please give this video a thumbs up, share our video, help us to grow together, so that I'll be willing and more encouraged to make you more videos that will help you to become better. So till I come your way next time with another useful content, do have a wonderful day ahead. Bye.